All right. You are welcome. All right. You are welcome. We are waiting for other people to join in. If you can hear me, drop just drop a comment in the comment section. Drop one. If you can hear me, drop one in the comment section. Yeah. I hope you can hear me. All right. So we are waiting for other people to join so that we can start very fully. And I'm still waiting. Okay. All right. Oh, thank you so much, Gioma. Thank you so much, Ma. Thank you. All right, let's wait for other people to join. At least, just a little people coming. All right. So, see, come. All right. Thank you guys for joining. Thank you. Thank you. Thank you. If you can hear me, if you can hear me, drop one in the comment section. If you can hear me, drop one in the comment section so we can start. Yeah, everybody that can just drop one in the comment section. So, all right. Um, yeah, thank you so much for joining from Indian. Thank you so much for joining. All right, still waiting for us. Oh, Malik. I'm good, sir. I'm good. Thank you. Thank you for joining. All right, I think you can just start now. Yeah. So you can just start like this. All right, thank you guys for joining. I really appreciate you all. Okay, so before we start, our today's topic is the trader's edge. So it's just about looking at what is most important. When it talks about edge, you are talking about what is most important thing, right? Okay, so before we start, can we just say a little prayer? Heavenly Father, we say thank you. Thank you for today's program. Lord, we ask for wisdom. We ask for knowledge. We ask for understanding. Go with us as we start this program. In the mighty name of Jesus, give unto us your spirit of wisdom. In Jesus' mighty name we pray. Amen. And at the end of every program, all glory belongs to you. In Jesus' name, amen. All right, thank you guys. Okay, the trader's edge. I would like to just, all right, oh, we have, so this is the thing here. Anybody joining us, just drop one in the comment section. If you are joining us, just drop one or introduce yourself. All right, okay, from the comment section, let me one thing clear which broker is best for trading. Okay, I will talk about that. I'll talk about that after this video. Let's just focus on it, right? Okay, the trader's edge. That's our topic for today. So one thing you need to understand, let's start from the basics. When we talk about the edge, edge means important. So we are talking about what is most important things to traders, right? So I will start like this. Our edge is not our strategy. Okay, let me try to bring up. a chat, or let me just use this. So, all right. So, hope everybody can hear me. So, I welcome everybody. If you are joining us, just drop I or one in the comment section so we can get to you. So, as I continue, right? So, our edge is not our strategy, is not the indicators, is not all these things that we think hedge is. Our hedge as a trader, that's the things we look out for first. Our edge as a trader is not even on the charts. It is the things in our mind. And that is what we'll be talking this evening. And also we'll be looking at strategy, we'll be looking at good strategy, how the mindset, how the psychology plays out inside of the strategy, right? So the first thing I'll be looking out here is um, our, our hedge is not what we trade, it is how we trade. So your hedge is not what you trade, it is how you trade. So it is not just about the strategy, it is not just about the indicators, it is not just about um, every analysis out there. One thing that differentiates a profitable trader from an unprofitable trader, it is not about the strategy. One thing that differentiates them, it is how they think about what they do and how they are thinking while they were doing it. Like, you need to understand this. What differentiates a profitable trader from an unprofitable trader is not the strategy. It is how they think. It is that, if you see a profitable trader, their mindset is very, very different from an unprofitable trader. For example, an unprofitable trader have the mindset of, oh, I have to trade for me to earn money. They did not have the mindset of trading as a business. Like, they have the mindset of, for me to make money, I have to trade. But if you see a profitable trader, they have this disciplined mindset. They have this patience. We talked about patience in our last talk show. They have this patience, like they wait so well that when they see the trade, they enter the trade. And the attitude during the trade is very, very, very important. And this is the mentality of a profitable trader. So these are the things that differentiate. And if you look at the things that differentiate a profitable trader from an unprofitable traders, there are no things that are too, like, there are not things that is in the charts. There are not things that the strategy or indicators. It is just about how they think about what they do and how they are thinking about what they are doing. How they are thinking. No, it's a continuous thing. How they are thinking. I hope everybody can hear me. If you can hear me, drop one in the comment section. All right. If you can hear me, drop one in the comment section. I want to be sure people can hear me. If you can hear me, drop one in the comment section. Am I audible enough? You, I hope everybody can hear me. Let me see. All right. Thank you. Thank you. Thank you. What's the name? Okay, learn with. Okay, John. Thank you. Learn with Shahil. Thank you. All right, thank you so much. Okay, let's continue. So as I was saying, our hedge is not, or your hedge is not what you trade. It is how you trade. This is how you trade. The thinking, the attitude, your belief, your perception of the market. No, all these things are not the things you analyze in the chart. They are yourself, who you are. All right. So a trader edge is an advantage that allows them to produce a profitable result consistently. A trader's edge. So a trader's edge is an advantage that allows them to produce a profitable result consistently over time. So that is a trader's edge. And those things that allows us to produce a profitable result consistently over times are not the things in the chart. They are not the things in the chart, they are the things with ourselves. That's why it is psychology, understanding oneself. So today I just want to like shift your mindset away from um, your edge. You know, when we are talking about my edge, people think, oh, indicators, people think it's strategy. Yes, all those things are part of the knowledge, they are part of the skills. You know, let me put it this way: trading or forex trading is a business, right? And we need to treat it like a business. And what kind of business is forex trading? Speculative business, speculative, right? It's a speculative business. So if forex trading is a business, what are the things needed for any business? Like for you to start a business, what are the things needed? You need three things, at least three things to start a business. Number one, you need the skills. Number two, you need the time. And number three, you need the money, finances. Like you need three things to start a business. So which means if forex trading is a business, then these three things must be in place. The time, you must have time. That's one, right? Number two, you must have what? You must have the skill. And that is where the strategy comes in. You have to know, you have to actually have a strategy. You have to actually have a rules, a framework you are working with, right? You cannot just go into the chart, the chart and be buying and selling. No, that is not the way to do it. You have to have the skill. Then after the skill, what is next? The finance. You have to have the money. And when it comes to a speculative business as forex trading, the money part is very, very important, because in forex trading you don't generate income. You only what? You only multiply your money. You need to see, these are basic mindsets. As for a forex trader, you need to know that in forex trading you are not generating an income, you are only multiplying your what? Your money. So which means if I want to trade, you have to have the mentality that this money I want to use to trade have at least have high possibility of what? Of being blown. Right? It's not like, oh, you have to use the risk management, right? But the understanding is that in forex trading you only multiply the money. So which means that for you to trade, you need to have at least a little amount of money. So you multiply it what? By trading. You don't generate it by trading. You don't generate, you multiply. So which means that the money you want to use to multiply, it what is a very high risk business. So which means the money too is what? You are risking the money to trade. And that is why we need to what? Have a risk management. Well, we talked about all this, but you just need to understand that trading is a business and there are three things that is needed for every business: the skill, the time, and the finance. So we need to have these three things. So let's continue. So we know that a trader's edge is any advantage that allows them to produce profitable results consistently over time. So what will let you to produce the trader's edge that will allow you to produce a profitable result consistently over time is not on the charts. It is you, your mind, everything, your belief, your perception, what your perception, your attitude, everything is what align that will make you profitable. Okay, let me lay an example like this. For example, you know, if you want to be happy, if you are seeing an happy person, someone that is very happy, is it the outward, is it the outward occurrence that is going to make the person happy, or the inward? For an happy person, it doesn't matter what is happening surrounding them, like outward anything. Happiness generates from within. You need to generate happiness from within. So if you are putting your happiness until an outward occasions or an outward appearance or any outward thing, maybe you are putting your happiness on people out there, that okay, before this thing happen, that's when I'll be happy. you may never be happy. So, but happiness being generated from within. No matter what happens, you are just happy. No matter what just happens, you are just happy. So that's the same thing as a trader, consistently trader. So I'll be moving very fast. So let's go to the 5 pillars. So the 5 pillars of a trader's edge. 5 pillars of a trader's edge. So those 5 pillars, that is what we'll be working with tonight. So if you can still hear me, drop a comment in this comment section. Just drop one. Let's see. If you can hear me, like you can hear me till now, drop one in the comment section. If you can still hear me till now, drop one in the comment section. Let's know. If you can still hear me till now, drop one in the comment section. Let me see. All right. Can everybody still hear me? All right. Can everybody still hear me? I'm still looking. If you can hear me, drop one in the comment section. I want to check if everybody can still hear me. All right, bro. Kindly, thank you. All right. Let's see. I want to try to let people to join. All right. So we have five pillars of a trader's edge. So the first pillar of a trader's edge is called a tested strategy. So that's the first thing, the pillars of a trader's edge. Number one is that you must have a proven strategy. A proven strategy in the sense that you must have a strategy, and that is the skill. So I talked about the things needed for a business. The skill is very, very important too. So you must have what? A proven strategy. So you must have a proven, oh, promise. Thank you so much. Thank you so much. Thank you for joining. All right. So I said 5 pillars of a trader's edge. So like the 5 pillars, the things, let me say that you can work on. Yes. I talked about that our edge, which is the important thing that we should focus on as a trader, is not on the chart, is our mind, right? So, but I want to talk about 5 pillars, the things you can work on. At least, if I use the word mind, you can be like, oh, I have to work on my psychology. I can't see myself, all those stuff, right? So when I use the word pillars, so which means I want to connect a lot of things together, 5 things that will stand as your edge. So we can work on those 5 things, then you can have a proper edge. So number one thing is what? A proven strategy. A proven strategy. So which means that, or a tested strategy. So a tested strategy, your strategy should have a clear set of rules with a proven positive expectancy. You see, the word with a proven positive expectancy, which means that if you have a strategy, you cannot just have a strategy and be like, oh, I have learned from my mentor, and because I learned from my mentor, that is all. Let me go and start trading by myself. No, that's not it. You have not proved it. Your mentor only taught you his own way, his own seeing. When mentors teaches, they only teach their own perceptions of the market. I talked about 3 things that is that a trader needs to have or to work on: your belief about the market, your perceptions, how you see the market, and your these things, these 3 things are very, very, very important. So when a mentor teaches you how to trade, what they only teaches you is that they teach you their own perceptions of the market, how they see the market. And some mentors, they will teach you what? Their belief of the market. Like they will tell you, oh, when you open the chart, fair value gap, fair value gap, fair value gap. And when you open the chart, everything you'll be seeing on the chart is what? Is fair value gap. But you can see some other people, when they open the chart, the first thing they are looking at is what? Is order block. their eyes is so sharp to the other block because of what that is what their belief, and their belief was we operate on their perceptions of the market, right? So which means their subconscious mind has their belief, and their belief being generated to their conscious mind is what brings their attitude, right? So when your mentor teaches you how to trade, they only teach you what the perceptions. And these pillars, the first pillars of a trader's edge, says you must what have a tested strategy. So which means that after your mentor teaches you, you have to take the strategy and go and test it, right? Go and test it, because in this industry we did not trade, we trade based on amount. Like we don't calculate your, when they talk about win rate, your win rate is not, you can't say okay I trade two trade and you want to use your win rate. No, it is, we are working with probabilities, and probability only works very well with what large sample. So which means that you need to test that strategy by yourself. You need to back test at least 50 trades, back test 50 trades, forward test 50 trades. So join it together. Now look how many profits you have and how many loss. So then you can calculate your win rate. So if you back test 50 trade, you forward test 50 trades, at that particular time you have 100. So that's your sample size is 100. So at least with an 100 sample size, we can be able to what to know the probability of what of your expectancies for your strategy. So that you can see, he said your strategy should have a clear set of rules with a proven positive expectancies. So if you know that okay, I have backtested my strategy, I have a positive expectancies. Like let's say for example, or this positive expectancy is talking about your win rate. Okay, I have a win rate of 50%. So at least you know that if I take 10 trades, I will win 5. I will win 5 out of 10. I know I will win 5. So this confidence is going to at least be there. And don't forget, I talked about 3 things that is needed for a business. For you to start a business, you need 3 things. You need a skill, you need what? You need time, and you need money, finances. So the first thing we are talking about in the pillars of a trader's edge is what? Is your skill. You need to have a skill. So which means that you can't be a trader without having a proven positive expectancies. Don't forget these 3 words: proving. You need to prove it. Even your mentor taught you, prove it by yourself. Positive, it must be positive, which means that after you sampled it with large samples number, the expectancies must come out positive, right? All right, so let me just show a little bit of something on my gold, because I promise I'm going to analyze gold too. So let me just show you a little bit on gold. Okay, before I show you a little bit on gold, I'll still show. Let me just. All right, if you look something, if you look one thing here on gold, there is something that is occurring. Like this particular trade, I give it out. I give a buy to. Let me see something here. Like if I use, I always call something. I always call this. Let me use so let's say for example now, it's not even an example. It's a maker free step. So I want to talk about a strategy I do use. So I will talk about the strategy, then I will analyze 2 or 3 trades. Then that's all. Okay. First thing I always look for in a trade, every time I look into the chart, I always trade fair value gap. I will not lie. I started with ICT. I started with ICT. So, ICT talks about fair value gap. So, that has been my perceptions of the market. Every time I open the chart, I always want to see the fair value gaps because it tells me something, right? So, that does not mean that every other people that are using other things is not right, right? So, I want to look for what order flow leg. And what is order flow leg? So order flow leg is market movement. Order flows is market movement or is market intentions. It's just about Order flow leg shows me the market intentions. That's what order flow leg is. Shows me the market intention. Or some people call it break of structure or something like that. So order flow leg also have a break of structure because it needs to break this high. So after breaking this high, we have what? We have a fair value area, and there will be a fair value gap inside the range. So there will be a fair value gap inside the range. Don't forget, this must be on higher time frame. So there will be a fair value gap inside the range. So when we have a fair value gap inside the range, I will expect for market to come back inside this fair value gap. So the expectation is that when market come into this fair value gap, I want to see buy to where at least this high, at least this high. On higher time frame, it may not give me a big RR, like the risk reward may not be so big on higher time frame. That is when I will now go to my lower time frame to look for what? To look for SLP. So which means the first thing I will look for is what? Order flow legs. And after order flow leg, I will look for what? SLP. So those are the two things. So, and don't forget, SLP means structure, liquidity, point of interest. So this is what I will go and look for on lower time frame. Inside where? Inside the higher time frame fair value gap. So you see, I analyze the higher time frame, then I go down to lower time frame to what? So take an entry. So when I go to lower time frame, inside this fair value gap, I'm coming. I hope you guys are still here with me. All right, if you can hear me, drop one in the comment section. Okay. Thank you so much. Thank you. All right, thank you, promise. Thank you, Ijoma. Thank you. I really appreciate everyone. All right, let me continue. Okay, inside this fair value gap, that is where I want to what? That is where I want to see the SLP. So the SLP I want to see inside this fair value gap will be what? Structure, liquidity, point of interest. So the structure here can be MSS, liquidity, and POI. So which means there must be an order block or a breaker block. Most time I do use a breaker block, right? So it must be inside the fair value gap, right? Inside the fair value gap, it must be there. All right, so let me show you one example, one very clear example, so clear that I think, did I miss it? No, I did not miss it. I did not. All right. Okay, let me first show you this one because this one was recent. This trade was recent here, even though I put my stop loss somewhere around here, but I put my TP around here, so it was recent. But let me show you. So the first thing I want to look out for is what? Higher time frame order flow legs. So when I look for higher time frame order flow leg, I go to 4 hours. So when I go to 4 hours here, you can see it here. I have another flow leg here. Like let me off everything so you can see the other flow leg here. I hope you guys can still hear me. I hope everybody can hear me. Of I hope I'm audible. I don't want to talk without nobody hearing me. Alright. Can everybody still hear me? Drop one in the comment section. Thank you. Alright, so you can see the order flow that we have inside here. Alright, thank you. So you can see the other flows we have inside here. There is another flow leg inside here. So inside these other flows, this high, the low, that is where I want to look for what? SLP. So when I go to 1 hour chart, I saw this SLP inside where? Inside that 4 hours order flows. And inside that 4 hours order flow, I saw this SLP. You can see it the MSS, liquidity, and what? Breaker block. So that is what I saw inside the what's it called? Inside the order flows leg. I saw that particular trade and I took it. Let me see if I can stop sharing. All right, I want to try to share. I want to try to share. I'm coming. All right. Can you see my screen? Can you see my screen? All right. Can you see my screen now? All right. So I gave it out. That's the particular trade we have last. That's the last year. I just want to show you while I gave it out so that. All right. So you can see the trade here. So you can see the trade here, gold, this particular gold here. So you can see the gold. I gave it out at that particular level. The market is going to, and this is where market was actually going. You can see where market was going. So I just want to show you the set. So you must first have a tested strategy. Like that is the whole sense of everything I'm just trying to say. You must have a tested strategy. And now let me show you something on my Telegram. I have my journal. You can see it here, setup journal. I have my journal here that I put all my trades. I back tested and I forward test all my trades. And I have at least now I have more than 100 back tested. I have more than 100 forward test and back tested trades. The one I forward test, the one I back tested, the wins, the loses, everything. This is the first step, a tested strategy. You must have a very tested strategy that in the forex trading, we work with probability, not certainty. So for you to work with probability, you will need a sample. Like you will need a large sample. The larger your sample, the accurate your probability. The larger your sample. So you can have a 200 back tested trade or 300, 400. The larger your sample, the sharp or accurate your probability. So you can see it here. I also have a journal. I put all my trades and I back tested it here by myself, just looking at my trade. I have almost 100 trade here. So this thing I'm trying to share is not about me just how did I have confidence about my strategy? Confidence in my strategy comes from my words, from a proving. I have proven it. I have seen the probability. Then I accepted the probability. All right. So let me stop sharing this screen. Coming. So let's go back to our screen back. All right. So you can see the things I'm talking about. So I will be moving very fast now. So you can see a tested strategy. Your strategy should have a clear set of rules with a proven positive expectancies. And do not trade based on hope. Do not trade based on hope. It's very, very risky. It's very, very dangerous. It is not a profitable trader mindset. You are trading based on hope. No, 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 no. That's not the way. Trade based on evidence, and evidence comes from probability. Evidence comes from what? When you sampled it, when you proven it, when you back tested, when you forward test, right? So a proving positive expectancies, right? So take responsibility by creating rules. So you must have a rules. Some traders, they enjoy not taking responsibility. Like they enjoy not taking responsibility, and the one of the way you may not, or you will not take responsibility in trading is by what? Is by not having a strategy, is by not having a rules. So if you don't have a rules, then you will not take responsibility, right? But as a trader, it's very important for you to what? Take responsibility. And the only way you can take responsibility is what? Creating a rules, creating a what? Backtesting your strategy and creating a rules, then follow it, be disciplined to it. That is where you can take responsibility of everything in the market, right? So let's go back. Let's go to our second. So we are talking about 5 pillars. So the first one is a tested strategy. So the second one is patience. We are back with patience again. Second is patience. Not every setup deserves your attention. The market rewards traders who can wait for high probability opportunities and ignore unnecessary trades. We talked about patience in our last talk show. When we talked about the power of patience, you know, we can't talk about patience enough. Patience is so big because it's very important. As a trader, we need 100% patience. As a trader, we need 100% patience because everything we do in the market, the moment you do not have patience in the market, you will begin to frustrate. You begin to frustrate. You begin to frustrate. And when you begin to frustrate, what will happen? Market will humble you. So no matter your strategy, no matter everything, if you don't have patience, everything will be scattered. So we need to have patience, and by ignoring trades, unnecessary trades, so that you know that this one, I just want to force it. No, no, don't become too boring in the market that you begin to lose your patience. No, no, no. The forex trading or the forex market is a boring market. It's a boring business that requires a lot of patience from us. Right? So let's go to I'll be moving fast. Let's go to the third. So our third pillars, the reason why I did not dwell more on the patient part is because we talked about patience in our last episode, the power of patience, the patience before and the patience after, the patience before and the patience doing the trade. We talked about all this in our last episode. You can just go and watch the last episode, right? So let's talk about the third one. The third one, which is risk management. Risk management. Your first responsibility is to what? Protect your capital. I talked about that in trading. Forex trading is a business, right? I talked about forex trading is a business and is a speculative business. And in speculative business, nothing is certain. Nothing is certain, right? Nothing is certain. In a speculative, nothing is certain. So when you know that nothing is certain in forex market, then your first responsibility is what? To protect your capital. I said, for you to start a business, you need three things: skill, finances, and time. So your finance in the trading, you have to protect it so much, because that is what is going to let you to last long in the market. So protect your finances, your capital, risk management, all these things, they are very important, right? So let's go to the fourth one. I'm looking at the time. I don't want to overstate. So the fourth one is called emotional discipline. Emotional discipline, the fear, greed, revenge trading, and overconfidence can destroy even the best strategy. You see, emotional discipline is so much important that no matter how best your strategy is, no matter how amazing your strategy is, no matter how good your strategy is, if you don't have emotional discipline, it's going to destroy everything. Oh, welcome, Nofisa. You are welcome, Nofisa. Um, we are going to look at that. I saw your message now. Goodbye, Zoom. Okay, don't worry. Before we end this video call, we are going to analyze the charts together. Then we see what is possible to happen next week or next month. All right, thank you. So emotional discipline is very important. No matter how good your strategy is, no matter how best it is, if you don't have emotional discipline, you are going to destroy everything. And don't forget, I said something when we started. I said that what differentiates a profitable trader from an unprofitable trader is what is how they think with what they are doing, how they think, they are thinking, how they think, their mentality, their mindset. All this, but their perception, their attitude is very important in the trading. There are some people, they just anytime they open their charts, they just want to buy, they just want to sell. Like they feel like that is what makes you a trader. Attitude. All these things destroy your account, they destroy your strategy. Some people have a very profitable strategy, but before they even get to enter their own strategy, they have entered a lot of useless trade, and those useless trade has taken their money away. So as a trader, our attitude, and don't forget, I said something while we started also, that as a trader, there are three things so important. Your belief. What is your belief about the market? What is your belief about the forex trading? What do you even what is your belief? What did it tell you from the beginning? As a trader, we need to go back to the beginning, go back to the foundation, which is your belief. What do you know about the market? Your belief is your subconscious mind. Your belief is in your subconscious mind. Those things are not seen. They are only reflected in your conscious mind by your attitude. Because the things you believe about the market, some people believe that, oh, the market is like a simulation. Some people believe that, oh, the market is just a place you buy, you sell, you buy, you sell, you make money. They have a wrong belief about the market. And before you can correct your attitude, you need to correct your belief, because your belief is the foundation, is the real thing, but your attitude is what reflected your belief. For someone now, you can have a belief of, oh, market is just you enter the trade, just take a trade, just buy, just sell, just buy, just sell. And the attitude of the person towards the market will be what? Over trading. The attitude will be what? No rules, indiscipline, very bad attitude the person will be having. And now if you want to correct the person, it is not correcting the attitude, it's what? Correcting the belief that the person have, the foundation. So our belief, our perception, what do you see the market to be? When you look at the chart, what are you seeing? What is your understanding about the market? Those are the perceptions. For example, now, if you want to know how powerful perception is, if you see someone, maybe, you are looking at the sky, you look up on the sky, and you are looking at the sky, and the cloud, there's a way the cloud can form images, right? You can look at the cloud and you are seeing something, you are seeing an image being formed. And another person can look at the same cloud or the sky, and they are not seeing anything. They are not seeing anything. You are seeing an image formed in the sky, but the person is not seeing it, because what? Your perception is different. But the way you can change the person is what? Is showing the person what you are seeing. Then if the person can see what you are seeing, immediately the person can see what you are seeing, what happens? The perception changes. Because when the person now look into the sky, the person can now see the thing you are seeing. So our perception about the market is very important. Without the right perception, we can't become a profitable trader. You can see some profitable trader out there. Come, they enter 2 trades in a month, 3 trades in a month. Like they are not forcing trade, they are waiting. And you see unprofitable traders taking 100 trades in a day. Belief, perception, attitude, very important. So emotional discipline is very important, because we need to understand that discipline. Okay, I talked about these 3 things here, where I talked about discipline, confidence, and focus. So those are the 3 attitude for us to have if you want to become a profitable trader. Discipline, confidence, focus. So these 3 things, if you are disciplined and if you are focused, you have to be confident in your strategy. All right. Oh, Nafisat, I saw your message. How to become a profitable trader. All right, just follow up with everything we are saying. That is the same way to become a profitable trader. Right? That's the same way to become a profitable trader. A profitable trader is not a big thing. It's a thing of the mind. Right? We still get there. I will still talk about consistency. All right, so the fifth one now is consistency. And this is where I'm going to. This is where I'll be dwelling much on consistency. Success in trading does not come from one big win. It comes from what? From following your process repeatedly, regardless of the outcome of any single trade. Okay, before I move away from here, I want to talk about something of that, regardless of the outcome of any single trade. You need to understand that in trading, every trade is independent. Every trade you are taking is independent. Market does not care about you. Market does not care about your strategy. Market does not care about your account. Market does not even know you. You need to understand, you need to have that mentality. Market does not know you. The trade you took that hits stop loss is independent. Is independent of what? Of the next trade. It does not mean that because you took a loss now, it's going to affect the next trade. No. It's the one you took a loss. Taking loss just means what? Stopping the trade. You only stop it by yourself. Oh, I took the loss. I accepted my wrongness, and you took the loss, and that is all, right? So it does not what? It does not dictate what is going to happen for your next trade, right? So every trade what is independent on their own, right? So regardless of the outcome of any single trade. So I will not start here is that consistency is a state of mind. Consistency what is a state of mind. Consistency is a state of mind, and consistency. The way I look at consistency is that is a state of mind. I talked about something when we started that if you want to be happy, if you want to be happy, you don't create happiness from your outward. Wait, I'm coming. All right, sorry. So you don't create happiness. I'm coming. So you don't create happiness from outward appearance, or you don't create happiness from what is happening outwardly. You create your happiness from within, because if your happiness depend on the outward, like maybe your neighbor or someone out there, if your happiness depends on them, it's going to affect. Come. All right, can you see my face now? Can anybody see me? I'm trying to. Can anybody see me? If you can see my face and hear me, please drop one in the comment section. Thank you. I'm waiting. If you can see my face and hear me, drop one in the comment section. If you can see my face and you hear me, drop one in the comment section. All right. If you can see my face and you can hear me, drop one in the comment section. Thank you. Hello, can you guys hear me? Can everybody hear me? Right, can you guys hear me? Well, let me just continue. I think I'm audible. All right, so you need to understand that consistencies come from within. It's a state of mind. It's the way you position your mind, that you have this understanding of the market, that no matter what it takes, I have a proven strategy and I'm going to take it independent of the next trade. So it's a state of mind that the market will not take away my my happiness. The market will not take away my emotional stability. The moment you begin to put your emotional stability by the result you are having in the market, is going to affect you as a trader. So it will not bring the consistency you are looking for. You see, this consistency of a thing, it is not like I know I know it's a thing that we need to we work on, right? But it's not that something so big. I'm talking about big, like something that you know that okay, every trade is independent of the next trade, and no matter the result of this trade I'm taking, I have accepted it. I I know that okay, no matter the result, it does not change who I am. It does not change my identity. I'm not putting my identity on one trade. I'm not putting my identity on two trades. I'm not putting my identity on 100 trades because I know that I cannot lose the whole of 100 trades. Right? This is how consistency is being built. Consistency does not mean that you'll be making money in all your trades. What it means is that you'll be trading with the right mindset, with the right emotional stability, without any result from the market shifting or changing your emotional stability. Without any results, any result. If it is win, the next onto the next trade. If it is loss, onto the next trade. Nothing changes your mentality, nothing changes your mindset, nothing changes you. So that is how consistency is being built. Consistency is a state of the mind. So for us to that's why you can see someone, for example now, I want to talk about the positive one. Okay, let me try to share my screen. All right. So can everybody hear me? You can hear me, drop I in the comment section. Can you hear me? You can hear me, drop one in the comment section. And you can see my screen. All right. So let me just continue. You know, consistency. I want to make use of example. I want to make use of a positive one and a negative one. You know, someone can, both of them are negative actually. Someone can win a trade. Maybe you win a trade, maybe you win back-to-back trades, or you win 3 consecutive trades. And all of a sudden, you become too confident to the extent that you are not disciplined again. To the extent that you ego begin to dwell on you because of what? Because you are winning consistency, like you are winning 3 consecutive trades, you begin to form ego. And guess what market is going to do for you? Market is going to humble you. And the particular time market is going to humble you, what will happen? It will affect your emotional stability. And the moment it affects your emotional stability, you cannot, it, it will affect your trading system. It will affect your trading strategy just because of your what? Of your psychology, your mind. So because you win a trade should not give you an ego. That is where consistency comes in. Should not give you an ego. Nothing, no result in the market should change your emotional stability. If it is a win, onto the next. If it is a loss, onto the next. You learn from both win and losses. So this is how things should be done. This is how things are supposed to be done, right? That is where consistency is being better. If you have consecutive losses, that should not take away your emotional stability. What should just happen is that you review your trades, you study it, you learn from it, and if there's a mistake on it, you accept your mistake, take responsibility. That is how consistency is being built. Consistency is built by you trading with the right mindset, with the right emotional stability, without the result of the market changing your emotional stability or changing your mentality about the market. No result in the market should change it. And the way market will not change it is by having what? A understanding, a belief that every trade is independent of the next trade. They are not dependent, is independent of each other, right? So that is consistency regardless of all. All right. So I have the greatest edge any trader can have is not a strategy, it is the discipline to execute one consistency. It's the discipline to execute one consistently. So the greatest edge that the trader can have, any trader can have, is not a strategy. It is a discipline to execute one consistently. Execute it consistently. That's the greatest edge. Having all the five pillars together. A tested strategy, that is your skill. Patience, that is your what? That is who you are. That is you. That is your identity. That is your attitude. Yes, your attitude. Risk management attitude is part of perception, your belief, because you must have a risk management. Emotional discipline, that is your attitude. Consis ten cy is the state of the mind, is your attitude, your belief, your perception. Everything still move around these three things: your belief, your perceptions, and your what? Your attitude. These two, these two here are your subconscious. This one here is your reflections. So these two here reflected it what? To your conscious mind. Alright, so we need to know that it is the discipline to execute one consistently. And we have here the greatest edge. So the greatest edge any trader can have is not a strategy, it is a discipline to execute one consistently. Discipline to execute one consistently. Alright, so I'll be having one here that let us pass and analyze the growth trade. Let's analyze the growth chart and see what we have for the next week. So, all right, we are about to. If you can still hear me, drop one in the comment section. If you can still hear me, before we go to analyze the growth chart, if you can still hear me, drop one in the comment section. Oh, you can hear me, drop one, drop one, drop one. We want to go analyze the growth chart now. Yeah, if you can hear me, drop one in the comment section. Can If you can hear me, drop one in the comment section. All right, all right. Okay, let's go analyze the charts and just see what we have for next week, or for next week, for next month. All right, so let me start from the monthly. So I'll be starting from the monthly. I'll be starting from the monthly with the aspect that market just ended. Market just finished a month, so a 1 month candle just closed. So we have a new month candle. So we have here this month candle being closed with a rejection. So market candles, 1 month candle closed with a rejection, but within it we have a fair value gap. So we have a fair value gap here. So we have a fair value gap here, which I can expect market to could come inside the fair value gap and sell, or what market should continue the sell, or market should just continue to sell without going back to the fair value gap. But I can see, because we have a bullish candle that is inside the range of a bearish candle, there is a possibility of market retracing to the fair value gap and sell. So there's a possibility of market retracing to the fair value gap and sell. So that is the expectation I have on the monthly chart. All right, so let's go to weekly chart. So on the weekly chart, you can see it here on the weekly chart. Something I always talks about is that this particular CRT here that I've been talking about from the past 1, 2, 3, for the past 4 weeks, market has not complete the CRT. So I'm still expecting markets to complete this liquidity. The market can go up over, but I'm looking for this CRT, the liquidity of the CRT. I'm kind of someone that look at candle signs, look at what market is going to do. So I'm kind of looking at the CRT, looking at market should take out the liquidity on this particular low, which I expect. Because if you look at if you look at something here, every all these candles, they are in the range of this one candle. So there's a high liquidity below here, which market can sweep before going up, right? So that is. Can you guys still hear me? If you can hear me, drop one in the comment section. If you can hear me, drop one in the comment section. All right. All right. So let me go to daily charts. So on daily charts here, what am I seeing on daily charts? No, because I had the understanding that market is going to go to sell, and now if you see something here on the daily chart here, you see what market did here on the daily chart. See what market did on the daily chart here. Market enter into what? Another block here, and market sold. So which means there's a liquidity below this low. So for market to what? To sell from this other block, then where is market coming to? This low. So I expect market to come to this low for liquidity. So that is the expectation of what market should do. So though you can see the market has been consolidating inside the range. So I don't really have what market is going to do here, because markets are consolidated inside the range. There's high, there's been low, everything is been taken. So I will just say consolidation inside a range. All right, so let's go to 4 hours chart. So on 4 hours chart here, you can see market took out a liquidity. Market trade away from a reclaimed order block here. You can see a reclaimed order block. I showed this out. On I gave this out on my Telegram channel. So you can see this sell here. So which means market should come to this low. And there's also an equal low. So here we have what? Equal, we have an equal low. So we have an equal low here. So expectation is that there should be a sell inside this, there should be a buy inside this range, then a sell. So to the point, to the equal low, because equal low is a liquidity zone in the market. There are many buy traders there. They are always trading support and resistance. So market should take out the liquidity on the equal lows. All right, thank you, ma. Can you just hear me now? I've said it. Can you hear me now? Like now. I want you to type one now. Like now, now, now. Can you hear me now? All right, so you can see it here. We have equal lows that market can comes to take out liquidity. And here I have what? I have an order flow. So this order flow here is where I expect market to enter, or this fair value gap here. So the understanding is that market should come inside the fair value gap. We have another flow leg. So this will be my expectation for the coming week. My expectation for the coming week. I'm not looking at buy, because there is no a good buy here. No good buy, because we don't have a bullish order flow. The only bullish order flow we have is this. You can see it here. Market make use of the fair value gap to do a buy continuation. So after we have that bullish, you can see there's no other bullish order flow. So we have a bearish order flow now. So I can expect markets to enter into the fair value gap and sell. So that is my expectation. So let me go to 1 hour. All right, so there's a possibility that we might be missing this particular sell I gave out. But this is the thing here. I expect market to come inside here or this high for sell continuation. So this particular buy zone here, I don't think it's going to hold. So it's just the buy zone here is just another block. I don't think it's going to hold. Market is going to take it out as a liquidity, because there's a liquidity below. There is two liquidity below it. So I don't like trading when there's a liquidity below. Yeah, so there's a liquidity below. So I expect markets to what? Take out the lows and take out the lows for liquidity. So I don't think that's buy level here is going to work. But so that is my expectation for the week. The fair value gap for sell continuation. Right. So the fair value gap for sell continuation is my expectation for the week. All right. So all I have for that is all I have for what's it called? Um Gold. That is all I have for gold for the next week or for the next month. Right. So that's all I have for gold for the next month. All right, for everything we have been saying, don't forget the trader's edge is not what you trade, it is how you trade. And don't forget one thing I've said from the beginning. If you forget everything, don't forget this one thing. What differentiates a profitable trader from unprofitable trader is that a profitable trader, it is how they think about what they do and how they are thinking is a continuous thing. How they are thinking about what they are doing. That is the difference. The mindset, the mentality, the perceptions, the belief is the difference. It's not the chart. If one of the profitable trader gives you their strategy, you are still going to blow the account, you are still going to lose, you are still going to become unprofitable. It is a mind, it is working on yourself. That is the difference. All right. So your edge your edge is not a secret strategy or a perfect indicator. Your edge is not a secret strategy or a perfect indicator. Your edge is the ability to execute a proven plan with discipline. Your edge is the ability to what? To execute a proven plan with discipline. Manage risk consistently. That is your edge. Manage risk consistently and stay patient when the market tests your emotion. That is your edge. Your edge is the ability to execute a proven plan with discipline, manage risk consistently and stay patient when the market tests your emotion. The market does not reward those who trade the most. It rewards those who trade with consistency. Master your mindset and you will strengthen your edge. So master your mindset and you will strengthen your edge. All right. So that is it for tonight. Um, that is it for tonight. And also, yeah, if you want to join our Telegram channel, there's a QR code above it, so you can join, you can scan it and join our Telegram channel for everything. So that is all we have for tonight. So that is all we have for tonight. All we have for tonight. All right. So thank you guys so much. I really appreciate everyone. Don't forget to like, share, and subscribe. Thank you.